Okay, so you are given this question. Have you seen this? This is common size, and they are asking you to use what? You should use what? Vertical common size what to analyze this question and then what give your what your verdict on that. This is what a common size question. All the calculations are done for you. Obviously, there are a number of years: year one, year two, and what? And year three. 1, 2. There are 5 years. You understand? And the calculation is already done for you. So here, what are they asking you to do? They want you to. So look at it. You have it here. P&L. You have your what? You have your statement of what? Financial position. And they said that as a financial advisor to ABC Mutual Fund, you just report on the financial health or otherwise for Toboas Limited based on vertical analysis financial statement and advise ABC Mutual Fund on whether to invest in Tobo Limited. Your report should focus on profitability, control cost analysis, asset structure, capital structure, and working capital structure. Have you seen that? So they've
Yes,
given
sir.
you the area to tackle. So here you will not use your own discretion. You have to what? Use the what they are asking you. So you pick your your profitability. Your profitability, you see it on the face of what of your P&L. Cost control, you also see it on P&L. Asset structure, you will see in the profit and loss account. There's certain financial position. Capital structure, same. Working capital also on what? On the settlement of financial position. So that is how you scrutinize this. The calculation is done. You have to do the what? You have to do the analysis for them. Do you understand? Okay, so
Yes.
having known this one, let's go in there and then see what we can do about this. So I've already given you the guideline how to write a report on this. Do you understand? So here
Yes.
you know your what the question, who are you reporting? You are reporting to. So here you will have your what you have your report here, and you are reporting to who? It will go to who? It will go to the CEO. That's what they said. If I'm lying, so let's check. They said that you should what? You should write. Your report should focus on no. They said as an mutual fund report on financial health or of Toboas Limited based on what vertical analysis. Do you understand? Okay, so you are writing to what to the Toboas company. Whether you write to CEO or you write to what the management, whichever way is okay. So the company name is what ABC Mutual Fund. Is that not the case?
Yes, sir.
ABC Mutual Fund. Okay, so you are writing to ABC Mutual Fund, right? And the company name is Toboas. So Toboas Financials is what you are going to look at and advise ABC whether they should invest in Toboas Limited. Are you with me? All right. So you have ABC what Mutual Fund, right? And that is from who? It's from you. They said you are what? You are a financial advisor in the question. Is that not the case?
Yes, sir.
So if you are a financial advisor, date, the date that you are writing the paper, you put it there, right? So today is what maybe first, right? Then you put it that one there. Then you start with what with the subject. The subject is what report on what on the financial health. That's what they stated. So you get all these captions from the question. Do you understand? So you get the subject, you will get it of what? From the question. Do you understand? The subject. You will not pick it from you will pick it from what? From the right. So you'll get all the information from the question because look at it. There's a subject. You say that right. Where is it? Report on financial health or otherwise of Toboas Limited based on vertical analysis. You understand? So the same thing. Can't you see that? Report on financial health of Toboas Limited. So you get the subject from the set question. All right. So let us do the introduction. So the introduction, what are they asking us? They say that this report, highlights on the financial health of of Tobo Tobo Limited, okay? Using what? Using vertical analysis. right? Okay. Let me say limited. Half October limited using the 5 years. Vertically, okay, vertically analyzed, vertically analyzed, vertically analyzed financial statement. Okay, so you have it something like that. Okay, what do you do? Which areas are they asking you to write? You understand? So you state that one. You say that the report shall focus on how many thematic areas are they asking you to do? On below thematic areas.
5.
1. Let us start. 1. Profitability. Is that not the case? 1. Profitability. Let me check. They say what? Profitability and cost control analysis. Okay. Profitability and cost control analysis. Okay, so hold on. Then you start talking about it. You can now talk about what's profitability, what cost control is all about. You understand? So with me, I would say that the section or this section provides more about what, how well the firm has managed the costs consumed and what to generate what profit. You understand? Because if you don't spend, you can't make profit, right? So here, let us go into the question, into the board, and let us see the profit margin and then the cost. Do you understand? Now let us go to the cost, the company. Please have you seen it? Follow it. Can you see it there?
Yes, sir.
Now look at the cost of sales. Look at it. What can you say about it?
Cost of sales has fluctuated.
I'm saying what can you say about it?
The percentage I'm seeing there tells me that cost of sales 2018 cost of sales was high.
Clearly, all you
20
have to no. Listen very carefully here. Clearly, when you look at the trend, you can clearly see that the company is what highly cost intensive. Look at it. Look at it. Look at it. It doesn't. The least cost of sale is what is 84.9. Clearly,
Yes.
this company is what highly intensive. Then you write. You see. So you
Okay.
say that over the period, the least cost of what of production or what or sales is what is 84 what 84 point what is 84.92, right? Which shows that the company is what is what production cost intensive. You see. Then you put it there like that. You understand? Then you put it there like that. Then you can further say that since the cost of sales is what is high, what do you think will affect the gross profit? You understand?
And gross profit will also go down.
You understand? Then you can also then let us go to gross profit. What can you say? We can say that from 2018, can you see it? From 2018, the gross profit has been increasing up to 2020. Have you seen that? So you can add it. So you say that. However, the gross profit over the period from 2018 which was how much? Which was how much? 7% started what? Started doing what? Started rising until when? Until 2020, when it started what? Declining. Have you seen how I'm writing it from 2020 to what? 2022. This shows that the firm is what? Is losing the grip to control what? To control direct cost of production. So after you've highlighted all these things, then you can say that the company, notwithstanding, can put in measures to reverse the trend. See, we are done with the cost element. Now let us look at profit margin. Let's look at the profit margin, because you say they are talking about profit and cost too. So we are done with cost issue. Let's look at what the profit margin issue. Okay, so let's look at what the profits. So when you look at the profit
Yeah.
after tax, can you see profit after tax?
Profit after tax,
Yes,
yes.
have you seen it? Okay, so we can talk about profit after tax. Then let us also look at total administrative cost. Did they have all the? They didn't add the administrative cost before. Okay, so let us look at the total administrative cost first. No, let's look at the profit first. Please, have you seen it? Okay, so the profit, what can you say about profit? What can you see?
Profit after tax has also declined because of.
You analyze from the last year up to present year. That's how we do.
So from 2018, we saw that profit was 2.7 and it went to 6. Okay. Marginal increase, not substantial
So you
or
will say that.
sufficient.
So you will come here. You will talk about what? Maybe the operating profit. You will say the operating profit. So a marginal increase from 2018, and what? It increased up to when? It increased up to 2021. You understand? It increased up to 2021. It started what? Falling between what? 2021 and what? 2022. Now here, after you talk about profit margin, then you compare it to what? To the gross profit margin. Please, have you seen it? So you can say something a bit about that. Okay, so once you'll be able to say that, you can also talk about the cost. You say that looking closely about the what? About the operating profit to gross profit, it can be what? It can be deduced that the firm is able to what? Control the what? The operating cost, unlike indirect cost. Unlike what? Direct cost. Sorry, direct cost or cost of what? Cost of sales. Okay, you leave it like that. Now, when you are done, you can also talk about some of the items, the finance cost. So the finance cost, when you look at also the finance cost, can you see the finance cost? So the finance cost, you see, you can talk about any other thing. You can pick some of the items that you speak about them. So the finance cost, can you say something about it? Can you say something about the finance cost?
Finance cost, looking carefully on the values we have there, it has also reduced drastically. Go from 0.1 to 0.05 to 0.02 to 0.04. It has reduced drastically. There's a fall or a decline.
So the finance cost
in
is well managed. You're looking at the word trajectory, which means the firm is managing what? It's what? Debts. Well, good. So now we are done with what? Profit and cost. Let us look at the next one is what? The next item is what? Asset structure. Look at asset structure. Now, what can we say? What can we see about asset structure? Let's go into the statement of financial position. Look at asset structure. You understand? Asset structure. So you start from, you look at the equity. Sorry, you look at the current asset or non-current asset. Look at them. Look at the total. Look at the total asset. Where is it? Look at the total non-current asset. Look at it. Can you see it? Okay. So then you look at the current asset. Have you seen the current asset? Compare
Yes,
the
sir.
current asset to non-current assets and say something.
Current assets has increased in the various years.
Okay, so here, what I will say here is
Whilst
that, excuse me, so what I say, you say, obviously, the firm has invested so much in what? In current what? Assets since what? Since 2018 to what? To 2022. Comparing it to what? To non-current asset. See? See that the non-current asset has seen a considerable what? Decline. Watch here. You can see it. From 2018, have you seen that it is declining? It is declining. It's gone up to 2022. You see? So from what? From 2018 to what? 2022. So now that I've laid down the background, then you can go into it and pick the individual item and talk about it. So have you seen that I've compared the total asset and total current asset and current liability? Do you understand? So
yeah,
I can go in and pick individual item that I can speak about. First, I'll look at the cash and cash equivalent. Look at the cash and cash equivalent. Look at it. Have you seen it? Have you seen how big cash and cash equivalents are?
yes,
Aha. So I can say that the firm has what has kept or held large parent or has kept large cash balance, balance in their books, which is what? Which is not what? Prudent what? Cash management, if not what? Restricted. See, the last time I was talking about cash, you don't need to hold on so much cash in your books. You need to invest them. Do you understand? So after speaking about what? About cash, I can also go in and talk about what again? Let me pick inventory. Inventory is also okay. I can also talk about inventory. What can I say about inventory? You see, you can say inventory from, okay, you can say inventory, okay, the inventory between 2018 and 2019 saw an increase it started falling from what? From 2019 to where? 2022. Oh, that's 2021. And rose again in what? In 2022. Okay. All right. What can you say? I can also talk about receivables. Or let me also talk about, so I can talk about receivables, right? So you can see that the company, the firm is managing, when you look at the value, the firm is what? Managing its what? Its receivables. As its decline, it declined between 2020 and 2021, and went up in 2022. The rate is moderate, which means the firm is adequately what? Managing its receivables. You can say, you can talk you can say a lot about using prepaid advances and other receivables. You can talk about it. Please, do you understand? I believe you are following.
Yes, sir.
Okay. So you can say something about them? Have you seen them? You can say something about them. Okay, which item is next? In the question, which item is next? Capital structure. Okay. Look at the capital structure. What can you say about? Let's look at the capital structure. Let's look at the capital structure. You go to the capital, so you have it here. You have your equity and so on and so forth. What can you say about capital structure? What can you say about capital structure? You look at the what? The
Capital structure.
look at the total equity, then you compare it
Yeah,
with what?
the total
Liability.
equity has increased from 2018 to 2018, 19, 20.
Okay. So what
And
you
then it
say?
declined.
So what you say is that clearly the company or the firm depends largely on what? External what? Funding compared to what? Compared to what? To equity or what? Share capital. You see, and this is risky. You can say this is what? Risky to the firm. Place your background to the firm, which is what? Highly what? Geared. You understand? You say gearing. Gearing is when the company has more external debt compared to its self financing. It's not good. Okay. Okay, so let us look at it. You can also talk about trend here. You can say that the debt was what? Was external debt reduced between 2018 to what? 20, this one is 20 what? 2020. Okay. So however, the external debt declined between 2018 and 2020, while while the equity while the equity rose between same period. Okay, so let's look at it. You understand? So that is what happened within that period. So when you are done, then you can advise saying that the firm shouldn't rely more on what? On external debt. External debt, since that can what? that can erode what? That can erode profits, erode profit because of what? Interest and what? And principal payment over the what? Over the years. Okay, so that is it about what? About that. Then the next one is what? The next one is what? Work working capital structure. Okay. Working capital structure. So what can you say about working capital structure? Go there. Let's go to statement of what? Profit and loss account. Sorry. Let's go to the statement of financial position. Have you seen the working capital?
Working capital is made up of inventory, receivables, and payables.
Okay, what can you say about working capital? So what you have to do, you go to the what? You talk about the what? The inventory, receivables, the cash, short-term cash, and all that. That's all that they are asking you. So me, when I look at the current assets, what I can say here is this. As already indicated, the firm is what? Is holding what? Huge amount of what? Of cash. You understand? Cash. And check here, look at the what do you call short-term investment as well. You see, and short-term investment has also what? Increased over the what? Over the years. However, I can also see the decline of what? Inventory, or inventory is not declining. Okay. However, inventory saw a decline in the last 2 years compared to what? Previous 3 years, where there was a what? There was an increase in what? In inventory. You also check that. I believe you understand what we call working capital. You understand? Now, when you are done, you can also say a lot of what again? I think I can also talk about prepayment in advance and other receivables. So you can also talk about prepayment. Again, prepayment and what? Other receivable. What are they? So a consistent decline from 2018 to what? 2021 before it arose in 2022. This shows the liquidity strength of the what? Of the firm. Now, we are talking about working capital. Working capital is what? All your assets, the current asset, less what? Your current liability. Let's look at your current liability. When you look at your current liability, look at your current liability. How much is your current liability? Have you seen your current liability? Clearly, your current liability is what? Is less compared to what? Your current assets. So here, the position of the firm in terms of what? Current assets. It can what? It can service. It can handle all current liability. Since the what? Since the firm is highly relying on what? On external debt to fund its what? Operations. That's all. So this is all that you can say about that. So in conclusion, what can you say? You can say in all profitability of the firm has been what? Has been good over the what? Over the years, compared to what? To gross what? Profit. The worrying aspect is what? Is over reliance on what? On external debts to finance what? It was operations. However, the working capital is in what? In good what? Position to handle all what? All due debt if arises. So we can say that you may what? You may request for any what? Clarification if need arises. Alright, so you can what? You sign financial advisor. Okay, so please, that is how we do the analysis. You see, this is how if I were being your point, this is how I will analyze it. Have you seen it? They will give you the question, then you write a report on it. Please, any question?
No question, sir.
Thank you very much. No question. Thank you very much. We'll draw down the curtain now, and then God will meet again tomorrow.